And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Hello, everybody. Welcome to the Coach's Playbook. Tuesday, November 29th. We are down a Mick. Doherty's on the mend, but we still have Dan and Hogue with us. For the exciting topic, today we're talking about, it was spurred by the action we saw yesterday of not fighting the market. It's like fighting the law. The law wins, the market wins. But before we get to all that good stuff, we have Hogue with the trader shout out today.
Yeah, we've got Brandon H. up about 6,300 right now, trading the NASDAQ. Nice day.
That is a nice day. And that's definitely someone who's not fighting the market. NASDAQ is down, of course, today. So I'm going to presume that he's been sticking short there. But when we thought about this topic, because we've talked about similar things, but I'm going to give it to Dan first, because yesterday Dan watches the boards for us from time to time, much of the time, and noticed something maybe not ideal that a lot of the traders were doing yesterday. So Dan, if you wanted to elaborate on that.
Yeah, absolutely. Yesterday we had markets, and when I talk about the market, I'm talking about equities right now. Equities kind of opened up near the lows, and in particular, the S&Ps opened up near our lows. And there's an opportunity right there off the open, right? If you see the market sitting on overnight lows, prior day low, right? If you have those levels down below, there's an opportunity to be long. But there's a point where you have to accept that you are in the wrong. As everybody knows, equities were a strong downtrend yesterday, continuing that directional move here today. When the market starts to change directions or establish a state, i.e. trending lower, which is what we saw yesterday, you need to be able to shift your biases, adjust your plan, look for opportunity to make money. Right. The goal in this whole industry is it's not about being right or, I can hold on to this trade until it comes back into the money, but it's get out quick and look for that next opportunity. And so yesterday, seeing a lot of traders kind of fight that downward move and hold on to these longs, I think there's a lot to it, right? It was going slow. It was taking its time. You're maybe taking $100, $200, $300 a heat in a trade, max, maybe $500. I wasn't seeing anything crazy, but it was just continuous fighting and saying, I'm picking the bottom. This is where it's going to bottom out. Well, when we had the news, we had everything coming out from the Fed yesterday. There was a lot of conversation happening that was indicating that there were potential moves to the downside. You want to make sure you're on the right side of that trend, right? I mean, we hear it all the time. Trend is your friend. And when the market really is establishing direction, I don't think anyone can question that. After the first hour yesterday, maybe 2 hours, we saw these markets really low, making low after new low after new low. What you want to do is you really want to look in there and find, where's this market giving me a little bit of strength where you think, hey, now's that. I think to me, it's like it's turning around. That's when I have to short it, right? Like, I have that gut instinct, like, okay, maybe there's a pop here. This is the buy. Okay, yeah, now sell it because we're in a downtrend, right? You want to look for those opportunities to then take advantage of directional move. So to me, that's the biggest thing, right? It's about being profitable in this industry. You can have a bias. You can sit down in the morning with your group that you trade with and say, I'm long today. I like the long side. As soon as the market tells you it's going to do something else, don't fight it and try and just squeeze out, a couple of ticks to say you were right. Get on the right side of it. Take the loss quickly, get on the short side, and take the move to the downside, because it's okay to take a loser. Losers are totally okay if you can adjust and shift the way you view the market.
Yeah, that's a good point there, Dan. Especially, you never want to be on the wrong side of a grind, and you know how a grind feels too. It's a pain machine, man. The market is a pain machine, and it's a hope and a prayer. If you have something that's just grinding against you, the idea that it's going to come back is, what do they call it? Smoking that hopium, right? Don't want to be smoking that hopium out there. Better to get reset and wait for something else. I feel like generally if something's grinding against me, it's like the trade's already been lost. Hogue, you have some insights into this.
Mhm.
Seen it for a while. At what point do you kind of in a day, say like yesterday, at what point are you just looking to be like, okay, let's wait for something else?
Well, I guess it depends really on what it is that flips your proverbial switch, right? Different people have different levels of loss before they start to kind of lose their grip on reality. Some people, it's a number of consecutive losing trades. For me, it's usually 3 straight losing trades, and I know something is definitely wrong, and I'm going to either take a break or just call it a day and look for the next opportunity the next day. I think Jim Dalton says it best. He says most retail traders, their most popular mistake that they make is trying to trade against a trending market, always trying to pick the bottom or pick the top. And coming from a long list of reversion traders, I have been guilty and still am guilty of doing that sometimes. I've just gotten a lot better at saying, okay, this is not right. I have to stop doing what I'm doing and either walk away or see if I can find the way to the other side. Now, I get it. A lot of folks are thinking, well, I've taken 3 longs. They've all lost. We're now at another new low here. There's no way this one cannot go my way, right? So I'm going to keep trying to take that long until the market just, like you said, just fills me full of pain. And then I'm going to finally get short one, and that's going to be the low. It just seems to be inevitably the way. So you recognizing sooner that the market state has changed and that you need to go the other direction. And here's a little hint for you, or a little clue. If you are trying to get into a directional market and the market doesn't let you in, you're trying to get a pullback. You recognize the potential area for a pullback to get to. The market doesn't get there. You look for the next pullback. The market doesn't get there. When the market is trying to keep you out, there's a signal. Well, you better not go the other way.
Yeah. This whole year has been a very strong. If you just I usually look at things through the ES, and this entire year has just been a series of, if you go to the day chart, just lower highs, lower lows. Oscillated back and forth between them, but it's definitely down. And I was just pointing out before here that 200-day moving average as of late, the last couple of months, a couple of days ago, it touches it. It's just been down again. It's just another one of those. I think that you got to look at the wider picture, definitely, when putting on these trades. There's definitely a desire for things to go lower in the absence of something changing. And what really emphasized to me that we're in a downward trend, besides obviously just look at the chart, is that when we get good news, things explode a bit. We got a CPI number that came out pretty soft, right? Led to a big rally, but then reverse at the 200-day and start going down again here. So I think that the wider time frame, before you start making any trades in the day thing, just be aware of that. And once again, don't fight that.
Yeah. One thing too, yesterday, right? Like we saw the big signal for me was yesterday. I'm looking at the S&Ps. NASDAQ was able to close the gap off the open from Sunday night. S&Ps did not even enter into that range. They made the attempt. They tried to get there, but it failed to close that gap. That's a quick indication that it's going to have a hard time getting up there. If it can't close the gap, the buyers are struggling to move this market higher. Quickly recognize, failed to close, look for rotation back to the downside. If it closes that gap, maybe there's a potential for a little bit more stronger buyers to come into that marketplace, but it wasn't there yesterday. And that's something you really want to keep in mind, right? Where is this market struggling to fail to get to on these up moves, right? We saw it right off the open. It rallied, it got to that gap, and I'm just like anyone else, I'm sitting there seeing, can we close this gap? Can we get back to settlement price? It couldn't. As soon as that failed, that was my big thing. Look for rotation to the downside, and that's where you're going to find that opportunity.
You're absolutely right, Dan. Sometimes what doesn't happen is equally or more important than what does.
Yes. Another like fundamental thing to think about, we're entering the sort of doldrums right now. We're post Thanksgiving. We got a few more weeks left in this year. And for the first time in a couple of years, there's going to be a lot of people doing some selling for tax reasons. I mean, I know I am. There's sort of a once in a while opportunity right now to take some of those juicy losses that we hate to take and turn them into taxes that you don't have to pay. And on a mass scale, a lot of people will be doing that. That's going to be another drag on the equities, especially heading into the end of the year. Who knows? I would be careful about something like that happened in winter near Christmas 2017, 2018, where you could have some massive sell-off because there's low liquidity, a lot of people trying to sell for various reasons, not a ton of reasons to buy at the moment, but just something to keep in the back of your mind as well. It's always good to have both cases and not become married to one, but the market will do what it's going to do. So you guys
100%.
selling anything? You got any big losers to sell, Dan?
I'll be sitting on my stuff.
No, only my 401k.
Yeah. So hopefully this will be over. Maybe our goal for the new year, we'll have to do our prediction tournament again for where things are. And I think I was out of town for the last one, but that probably would have, I feel like I'm usually the perma bear and this would have been my year to shine.
Yeah.
I think a number of us last year were relatively flat or a little bit up, if I recall correctly. We'll have to do some research, pull our numbers from last year, and see where everyone was at.
Yeah, I think the theme of this year is kind of the froth, irrational exuberance. You can only see it in retrospect. Like I don't remember feeling how when the S&P was at 4,800 or whatever, thinking like, yeah, crash imminent or something like that. But
We'll
in
be
retrospect,
down at 3,500 by end of year.
Yeah, something like that. So just be careful out there. Anyone got anything else on fighting the markets?
Don't do it.
Don't do it.
You're going to get beat up. And even if the one time you do it and it works for you, you're going to find 9 out of 10 times it's not going to. You're only reinforcing bad behavior by doing it.
And trust your gut. How often do you sit there and you're in a trade, you know it's the wrong trade, but you stay in it anyhow, and it continues to go against, and you get that. And this is my thing. I have no problem explaining my faults. I'll be in a trade, I know it's wrong, and it'll come back just enough, and I'll go, oh, maybe it's just gonna go now, and then it rips right back against me.
That's the one. That's what
it gets me, and it's something I know, and I'm better at it to this day than I was, yesterday and the day before. I'm always trying to be better at it. But when you know it's wrong, get out. I don't want to say there's a thing called a gut indicator, but you've been around these screens long enough where you're in the wrong trade. Get out. Look at your technicals, look at your levels, look at what you've studied and worked on so long. It's going to tell you you're probably wrong. So get out.
The psychology is so damn hard, though. You can think about it with stocks or indices like this. It's so much easier to hold. Like, think about the same trade made 2 different ways. Say you were like a longer term, but still leveraged S&P trader, right? It's so much easier to say from 4,500 to let it go against you for 500 points than it would be if you were in the same position short and were actually up those 500 points. People are so much, and I'm not saying I'm excluded from this. It is so much easier and so much more common for people to hold with conviction losers like their life friggin' depends on it. Like they just hold and hold and hold versus almost impossible for people to hold on to something that's that far in their favor. And that's just a part of psychology that's the hopium. right?
Mhm. And
So
at the end of the day,
difficult to
just
do.
be patient. Just be patient. I think John said it, and I think we kind of didn't touch on it deep enough, but like you'll see it if you're trying to get in a move and it's just missing the price that you're trying to fill. Maybe it's a downtrend and you're trying to short it and it's coming like 2 ticks and then it moves lower and it comes like 6 ticks away and then it comes lower and then it comes 8 ticks away. That's telling you something. You know, there's opportunity to be had. You're pretty darn close. You're almost there. You know, if it really, in my opinion, if you have a belief and a conviction to the directional move, if you have to sacrifice 3 to 5 ticks, that's totally okay. You should be looking for bigger profits than that. So you should be able to give yourself some room to get in on that opportunity.
You know, I just thought about it like more concisely. There is this reversion to the mean in the short term that people just believe in intrinsically. So when something's against you, there is this unwavering thought that it's going to come back. And when something's in your favor, you're feeling the same way, that this is going to come back. So I got to get out now. And that's not necessarily the case. So be careful out there. Hogue, you got any words of wisdom? Oh, actually, Dan, do you have a quote?
I do.
Okay.
And now I may have used this one in the past, but I think it's always a very good one. It's from Alexander Elder. The goal of a successful trader is to make the best trades. Money is secondary.
I think that's
Just
a good
trade.
point.
It's a
Just
great
make
quote.
good trades.
It's a great quote. Kind of leads me to something that somebody in the S&Ps told me one time. My goal is to become a good trader and make good trading decisions. Money's a byproduct.
Absolutely. So think about the trade out there. Stay safe. Don't fight the markets. We will be back next week, maybe with a full cast. Who knows? It's the holidays. People are out. Now, yeah, you got dogs barking too. There's dogs barking all over. It's like
Yeah, Lacey, she got somebody walking by here.
oh no, with my neighbors now, it's like the Christmas story or something with the dogs outside. Anyway, with that, don't fight the market. Trade well. We'll see you next week.